Hey everyone, this is DayTraderRockStar, and this is a Thursday video. I would call it a market radar video. Haven't done one of those in a while. Also wanted to catch us up on some setups. I'm off the mic today, but I'm in the office all day and really doing a lot of research. So we want to just catch you up on a couple big things. We talked about silver this week, silver and gold, how it was perfectly set up. I haven't seen silver and gold set up this well. And we ended up just taking profits in silver and then look at the follow-through day. I mean, it was a nice trade on silver, but today silver and gold really exploded, and I just wanted to touch base because a lot of people were asking me about the gold trade, and I still like the gold trade here. I still like the silver and gold trade, except, the only thing we have to pay attention to is maybe there is a trend line above us, and we're bought on the daily. So, these are levels that you have to pay attention to. But the volume today and, the scenario, and again, I've been working on some projects today, so I haven't really been following the gold trade today and just working off of everything. And what I mean by that is, I don't know if this is a reaction from the Fed release yesterday, or there's, maybe international just turmoil is kind of sparking gold a little. I like to call this a technical move because we haven't seen such a great setup like this, and we look at a lower trend line, X marks the spot type of trade versus the top of the trend line. I mean, I like this. I thought we were going to see this type of move on gold and silver. So I'm not really surprised on this. I'm excited about it. I think that gold has a good shot of moving higher off of this, but again, this is a situation I always talk about. I mean, if you're a professional gambler, you stick to the rules. And you always stick to the rules, because once you go outside those boundaries, then you take the odds away from you. You don't go by the system, and you can't track it, you can't justify it or anything. Normally, I would say great setup here, and be careful here. It's just the way things have happened. So it's really up to you at your point. You know what I'm talking about. It's up to you at this point to decide what you want to do with that. I do think we are going to move higher on gold. And the silver trade too. And the silver basically the same thing. A little bit better. We're actually breaking through that trend line. And of course, this was a classic setup, beautiful setup. And there's so many other great setups. Now, normally with the market radar, I do normally do an S&P update. And again, there's not much more to say than that the Fed is out. It's behind us. It's the summer months, and the market is grinding higher. And this type of a scenario where I put this trend line in right when I noticed this little pivot area. This was way back. Look how we came down to that and turned back up. It is what it is. The stochastics are a great indicator, especially just charting out the stochastics and understanding that there's a trend there, momentum trend, and that even works out. I mean, that does, you have the underlying trend and price point or price activity, causing everything here to move. But there is just a nice feel about this market, and with Janet Yellen coming out and really doing a good job. And again, I throw out the disclaimer that I know not everyone is happy with what the markets are doing or what the process is and how the Fed is involved. And you hear that. You always hear there's always two sides of the story. There's the bulls and the bears. And not saying that most people are bears, but you do feel that this market is going up and people don't understand why. And that's a signal in itself. And I was watching and goofing in the room today because a lot of people were calling, hey, this is a bubble, this is going to come down. And I said, well, you know what, this market's not coming down until my sister gets back in. And she hasn't gotten back in yet. So my overall prediction here, I think with for a market radar longer term call, I do see this market here just grinding higher throughout the summer and into the winter, And, as we get closer to the end of the taper, then I expect something to maybe, work with the market. Be it, an interest rate policy change, or just a policy change, or something out there that kind of just a change of course. But right now the course is set. The market understands that, and, who's going to be the first one to overturn the apple cart here? I mean, if people are making money and continue to buy the dips, why not just, join that team? If you can't fight them, join them, as they say. So right now things are looking really good. If we do see divergences, we do see the momentum shifting, I'll be the first one to notice that. And maybe we are getting that setup. Maybe a spike up to the trend line again, and we don't follow up with an overbought level, and we turn over. That would, change my opinion. But right now we don't see that. And it's hard to predict. So As long as people out there saying this market does not, cannot go any higher, probably expect this market to go higher. I want to show you some stocks, though. We've been killing it in the market. I mean, I've been very happy this last 2-3 weeks with the watch list, because we've been seeing basically a lot of lane divergences, which have been kicking butt. The wedge patterns have been coming out, the channels have been coming, and the flags have been coming out. And when you stick yourself into that, the boundaries of those trades, and you just kind of force yourself just to take the best of the best, then you're getting the results of what we're seeing this week here at Day Trading Radio. So I want to continue to do that. Tomorrow we have a Friday, and I'll be putting out the new watch list. So, today I'm just going to go over a couple things. I mean, ArcelorMittal, the beautiful wedge pattern. I think Fusion brought that one to the board in the room. It was a lane divergence, and I did some charting on it. It was actually a great lane divergence because it's a lane divergence on both the daily and the 60-minute time frame. It's very clear here seeing it on the daily, and I'm going to actually show it to you on this chart right here. So I have all. This is the charts that go out to the members at Day Trading Radio with our buy zones, our profit zones, and everything here kind of put in. But this is a little education I put in also because I wanted to show you how that lane divergence here kind of sets up, especially with the stochastics underneath it. So you see that a higher low on the stochastics and a lower low with the price. This is that lane divergence. And this is actually on the daily, but it's also on the 60. So you see that's a perfect, and it's a wedge pattern. So of course, once you start to notice this, and I was filling in part of my training book, I guess you would call it an educational big site I'm working on. Being able to get yourself into a lane divergence is first recognizing it before it really confirms. And to recognize that is, as you can see, this stock pushed lower, broke down here, but the stochastics here weren't at the lows as this was making lows. And that's telling you, well, there's a good shot that we're actually not as weak as we were before, and that's a good, and that's the scenario you're going to get when you get a lane divergence. You're going to get a higher low. So if it's setting up as a higher low, then you better believe that there's a good shot. So that's what I like to usually get my first entry. Then when we get the crossover, then we have our confirmation, and then we have a nice little trade to the upside, and especially with this wedge, it continues to look good. And now that was the same exact thing that we saw on the 60-minute time frame. See you later, Brian. 3:30. And here's the 60-minute time frame, and this is kind of interesting too because you have that, divergence. Or is it? This is the 60? This is not. This is Liberty Media. Sorry. I got so many stocks on my board. Here's a 60-minute time frame. And here's that 60-minute time frame in the 60-minute divergence. You take a look down here, the higher low and the low and the gap down low, and that just held up. Once you saw that starting to happen, that was even better because the timing comes down to... What the hell was that? Did you just hear something? Oh. Sorry about that. I'm being distracted in the office here. All right, so I just took care of that. A little distractions here. I apologize. ArcelorMittal, great setup. We're in the Dunkin' Donuts DNKN. That was also a fantastic little setup here, and it pulled back today. But you also have to remember, once the momentum switches, that we have the daily as a longer-term time frame, and within that daily move up, you're going to get, just like you got over here, you're going to get a rotation of the 60-minute time frame. Now, the 60-minute time frame did start to rotate back down. We pushed higher, and then we pushed back up, and now we pulled back down, and it's pulling back. But take a look at it, really. I broke this down during the day on the show, and I said there's an underlying trend line right here. Let's see if we actually push up off this trend line. And even if we break down there, once we get oversold on the 60, we should have that price maintained above that low here on the 16th. But take a look at this. This is Dunkin' Donuts happening right now. And you can actually let me zoom out here. This is really where we concentrated on yesterday, and you can see the move back up here, and now the move back and the initial bounce off, and you got to say, wow, these trend lines really work. I mean, it came right down to this level, and we bounced off of it, came back down to it again. It's continued to bounce off of it. Maybe we get a breakdown, maybe not, but the odds are that this trend is starting to change. The daily's changed, so the pullback is probably a good opportunity in this market right now. So let's go back to that chart, and you can see here Dunkin' Donuts here, right back down here. But again, we know that we want to have the wind in our sails, the tide going in the direction of our trade. So what else did I want to get to fast? I want to go over gold. I want to just do a couple of little updates here. Now, I was banging the table down here on Sony, and we had to deal with about a week and a half of chop, hanging on that 16 level, pushing higher. But once we got the move yesterday, we started turning back up. I said, wait for that pop. We're going to get that pop. And sure enough, we got a nice pop in Sony. I do believe this is just the beginning of this stock here, pushing back up to $18. And there's no real, rhyme or reason right now. It's a tougher stock to trade. It gaps up a lot. It makes its move usually in the overnight hours. And when we open up, the situation's already in place on Sony because it trades in foreign markets. But this is typically a good setup here, and especially in a good quality name. And I expect this one to move higher. So extremely happy with this. The shorts, well, this is not a market for shorts. Downgrade coming into Dr. Pepper Snapple, but the downgrade, actually was bought up and actually closing near the highs or trading near the highs of the session. We're seeing if we're going to get a cross back down here and maybe a failure. And this is, again, the shorts. Have a little issue with the shorts, and I understand that's a higher risk trade, and still in it. We'll see if it works out. The same thing with the CVS, which is actually fine. This is exactly what I wanted to see. We wanted to see a move back up here. We got oversold. We came down to the wedge pattern, get a little overbought. We should get a little move up, and then we should fail. And once we start to cross back over on this the daily stochastics, it is going to be a great signal. We're probably going to break down here, and who knows where we're going to come down. We'll start to measure it out, but it still looks like a good short. Here we have KSU, and KSU Southern Kansas City Southern Railroad. Beautiful flag, perfect textbook setup. So we took it. It's definitely in the money. Some people are, gotten about $2 off this trade already. And I still think we'll have a little more upside here based off of the daily here. The nice spread on the daily. We're rotating back up. Understand that a couple days of upside, sometimes we met with a pullback, a slight pullback, but not much. And then by the end of the day, sometimes things actually turn around and they push back up. Not much of a pullback here. Let's take a look at the 60. 60 here kind of curling back down. You can see a nice little flag. If we get a little bit further up, I'd lock in profits. We're very close to get, over $2 on this trade. So I'm, very happy with that flag setup, and they're going to continue to come. Like I said, tomorrow we have a Friday, and Friday means I'm going to be busting out the charts all day, and we're going to have a fantastic watch list for you. So going into the rest of the week, have a great week. I'll talk to you tomorrow, of course. You're going to get another video from me. Actually, you're going to get two videos. I'm going to do another nice video. You're going to see my beard tomorrow. You're going to see my beard tomorrow. That's right. Because I've been threatened to lose it. Anyway, have a great night. And this is the Market Radar for Friday, June 20th. Take care.